What's going on, guys? And welcome to Friday night. It is February 24th. We are closing out the 8th week of investing for the year. On our channel, we are about happiness, health, and wealth, and we are investing $50 a day into dividend paying stocks every day, Monday through Friday, when the market's open. All right, so diving into our YouTube channel tracker. As I said, today is February 24th of 2023. My weight is currently at 286.1 pounds. I have really done a terrible job this week, and I'm just going to be blunt about it. It's what it is. It's bad. I know that. I'm currently in the habit of not going to the gym more than twice a week, and I need to get that addressed. So that's a big thing. I've been working on some personal stuff, and that's definitely gotten in the way of going to the gym. It's funny how personal stuff is getting in the way of personal stuff. But I definitely need to get back into the gym, and I need to do that aggressively. So my current weight loss, I'm only at 12.6 pounds down, which is really like the worst, because I was so close to being in the 270s, and now I'm so far from being in the 270s. So, I'm hoping that I can run back into the gym. Part of the problem is my gym also closes at like weird times on Fridays and Saturdays. So today I was like, sweet, I can get over there, and they're closed. The same thing with Sundays. It's really like a Monday through Thursday kind of place. So, I really got to get over there. I'm hoping this Sunday I should be able to like do a serious workout, kind of get back on track and shock my system back into like feeling active. But I need to do better. Like, just flat out, I need to do better. Investment balance. So our investment balance is currently at $2,376.64. We're creeping up on $2,500, which is pretty exciting. Definitely good to see that balance at least growing. If one thing's going to grow, or all things are going to grow, might as well have it be the balance. Dividends earned, we're currently sitting at $6.1 or $6.10. Now, our total growth, our total growth for the year, we're down $87.75. Okay. And this is this portfolio's time to shine. I know this looks like a big deal, like, oh my God, this guy's down $87. First, we started this account with being down about $30 anyway. So we're really down about $57. That's still a lot. I mean, you can see here from Monday to today, we lost $80, right? But we are dollar cost averaging into dividend paying stocks. Okay. So when I see that, I see, all right, this stuff's on sale. I believe in the companies that we're investing in, right? I definitely believe in their dividends, and I believe in them rebounding eventually. If you can buy something on sale that you want and that you believe in and that you plan on keeping, do it, right? Your future is no different. If you can buy a stock that you believe in the company and they're going to pay you dividends, or historically have paid dividends, and you have good evidence that they will pay dividends, this is a great time for you. All right. Buy when people are scared and sell when people are confident, or whatever Warren Buffett said. If you don't know who Warren Buffett is, look him up. He's a very rich dude. He lives in Nebraska. Like hundreds of billions of rich. But yeah, so I'm actually in a weird way, it sounds so stupid. In a weird way, I'm excited to see the total growth down, right? I know it's very counterintuitive, but I'm buying the dividends more than I'm buying the growth, right? And what that means is if I can put in $5 and earn 50 cents a year for the rest of my life, I'd rather that than put in $5 and earn 42 cents a year for the rest of my life. So that's how I look at it, right? Now, the dividends earned, which we see in the column right here again, those will start climbing, right? Remember, this is a marathon, not a sprint. We've been investing for 2 months. So the whole first month, we couldn't really even earn dividends because we didn't have stocks the previous month, right? So now looking forward, we're going into March having had a pretty good balance in February. We're going to close out February at about $2,400 in the account. That should yield some decent dividends, especially if we're buying dividends or dividend paying stocks at these big discounts that we're at right now. So those next couple days get that extra little bit of value. What's even better is that when we're buying those stocks back with our dividend payouts, right? So we're going to get more than what we would have if it didn't come down. So let me explain that. If a stock is $10 and it pays $1 of dividend, right? This is a ridiculous example, but if a stock is $1 and it pays you $1 in dividend, you get 0.1 shares when the dividend comes around. Okay. Now, if the stock is $9, right? So the stock starts at $10 and then it drops down to $9, and you still get that dollar dividend payout, right? You're going to get more shares out of your dividend so that when it comes back up, guess what? You just made out like awesome. So that's what I'm excited for. In honesty, I hope it keeps dropping. Now, eventually, yes, I want it to come back and I want it to go up. But I wanted to do that after I've got like hundreds of shares of everything. I want to buy this thing as cheap as possible, especially in the beginning, because I need that dividend growth. That was long-winded. Sorry. YouTube income. We're still at that $100. To whoever signed up for Sofi with the link, thank you. I appreciate you guys. That does help support the channel and helps with some channel growth. I took the $100. I sold off the two or whatever it was. I sold off the shares that it gave me, and I put it into JEPQ. And then to match that, I started a new Fidelity account. So that Fidelity account, I wanted to do them both in SoFi. I just need to call SoFi and ask how to have multiple trading accounts, or if that's possible. But I started a new Fidelity account, so I got to figure out what I'm going to put that stuff into. It might be the same things in this. I'm not quite sure. Total subscriber count. We're at 1,264 subscribers. So we've gained one subscriber this week. Again, this week I really kind of like I dropped the ball on like a lot of stuff. Really, really busy doing other non-channel related things. Trying to get a lot of stuff accomplished. But we did gain a subscriber, so thank you to the new subscriber and the previous subscribers. I thank you as well. Total views, 62,246. And then total watch hours, 1365.4. So, looking at this tracker, it's really tough for me because you can see how like slacking off for a week is just so negative. Really, really negative. I shouldn't say slacking because I was like actually working really hard on a lot of things. But in this amount of time, like we went from market open, I gained almost a pound, and sure, we did okay. The portfolio stuff looks good, but that's automated, so that doesn't take any work. I automate invest every day, $50. Like that's not difficult. We gained a subscriber, got some views, made a short or two. I just, when you look at the momentum that we had at the beginning, like we started at almost 300 pounds and then just like really got into it. We're, getting subscribers and big chunks, cranking out videos. Like it's just, I feel like I let myself down, but that's okay because again, it's a marathon, not a sprint. So kind of a bummer. But we're getting there, and it's seeing this now, looking at the tracker, I definitely need to get back on track a little bit. So as I said at the beginning, I'm not a wealth manager, credit counselor, financial advisor, none of that. This is to motivate me and hopefully you guys as well. And just this like blatant accountability, or not holding myself accountable on a channel where I'm like, oh, I have to make a video and say how much I like didn't do a good job. It's tough, but it's motivating because Monday I'll be back at it again, and hopefully we have a lower number here, and that's all we can do, right? We can just try to better ourselves and work on our happiness, health, and wealth. But with that, on that depressing note, let's dive into our Sofi account on Seeking Alpha, and let's check out the portfolio and who's doing what and all that. So I sorted out by shares. At the top, we have MPW, Medical Properties Trust, with 15.95 shares. This is the biggest hit to our portfolio right now. And I understand why it's down, but I'm going to make a whole video about this, and I'll link it to the end. MPW should not be crashing like it is. At least I don't think. We'll get into what's going on with MPW in another video. I'll link it at the end. But we're at $168.27 of MPW. That's 15.95 shares. The total dividend yield is now at 10.41%. So this stock has come down enough that the forward yield, if you put $100 into MPW, you would get $10.41 a year, assuming that they pay out the dividend as projected. That is nuts. Like, that's a lot. Yeah, it shouldn't be like that. It is like that because people are trading it down. So, like, if I bought this at $10.55 on Monday, my $5 goes in, I'm going to get 50 cents a year for the rest of my life, potentially, based on this forward yield. That's ridiculous. So I like that. Also, they have the dividend coming up. I hope it stays low. Like, I hope that I get, what are they paying? It's like 29 cents or something like that. Yeah, so they're paying 29 cents per share coming up. If this stays as low as it does, I mean, 15 shares times 29 cents is like a little bit of buying power here. 15 times 0.29, that's $4.35. I mean, I might, also because I'm going to be getting more shares from now till March 15th, which is when they take their snapshot, I might get a half a share out of this, which would be awesome. Getting a half a share of MPW just out of the dividend payoff on the first quarter that we start this thing would be sweet. So high hopes for that. Let's go back to shares. So the next one that we have the most highest shares of is AT&T. We have 10.32 shares of that. Total value $198.60. This has basically stayed flat. It's been up and down and up and down and up and down, and we are riding that wave right in the middle. JEPQ, this is something that we are not buying regularly. This is not an automated purchase. This is something that we're just buying and watching it to see kind of what happens with it. It's a new fund, so the best way to track a new fund is to invest a little in it and kind of watch it and try to understand how it flows and when people buy it, when people sell it, all that. So we're at $298.19, 7.05 shares. Price is down today. Actually dropped down a lot. If you look at today's percent gain, you can see that things are dropping a lot right now. 5.3%, 0.57, 1.28, 1.66. Everything is pretty much down, or everything is down today. So rough day in the market. But, again, same thing. If it stays down and we get 12.34% forward yield on the dividend, we just get more free shares. So that's great. So, Realty Income Corporation, This is our largest holding in the account. We're putting $10 a day into Realty Income. So we have 6.06 shares of that. Even Realty Income is down, which is nuts. They're typically one of the more stable ones. But we're at $393.86. The price is currently $64.98, which, again, is pretty low for them. I'm surprised that they took a big hit like they did. SEHD, this is Schwab's dividend ETF. So we have 5.23 shares of that. That's trading at 74.86. And our total value, again, $391. Look at the dividend yield, guys. Because it's coming down, this dividend yield is 3.76. This drops another like $20. We're looking at almost a 4% dividend, which is great. So love seeing that, at least for now. JEPI, or JEPI. This we have 3.66 shares of, $197.09. Again, doing pretty well, kind of riding that wave of volatility. We're down $3 on it over the course of the year. Total price right now is $53.85. That dividend yield's looking mighty good, quite delicious. 2 years of growth. Again, it's a 2-year-old fund, so a lot of people have been putting a lot of money into this fund. This is sort of turning into like the retirement go-to for people who want to earn an income out of their stock portfolio, which is a great thing for the fund. The more money they have, the more they can make with it, allegedly. But so that's a good thing to see that they're pretty stable. NASDAQ. All right, so this is one that was in the portfolio before. It was down when we started the portfolio. We're just kind of keeping it until they pay a dividend and I decide what to do with it. But their dividend yield is up just because it's tanking, or dropping quickly, I should say. We have 2.31 shares of that. It's $131.93 is our total balance on there, and we have $57.05 for the current price. They're down 6.76% on the year, or I shouldn't say on the year, but year to date. So from the time we started this portfolio, this has dropped almost 7%. Procter and Gamble. We have 1.39 shares of Procter and Gamble. Our value is $194, so we're down $6. The price of Procter and Gamble is down to $139.26, and this dividend yield has been creeping up every video. So now this one's exciting, and this should be exciting to every type of dividend investor, who's planning on retiring off of their dividends and never selling Procter and Gamble. Why? Because they have increased their dividend every single year for the past 66 years. That's a fantastic streak. I just don't see them breaking it. A lot of people don't see them breaking it, but they are dedicated to paying that dividend out, and they are what is called a dividend king because of that. What this means for us is they're down 7.59%, and they're still probably going to pay that dividend, or at least we hope, right? But they are down a lot year to date. So, and we're just buying these shares every day it goes down. We're getting them a little cheaper and a little cheaper and a little cheaper, but we're still going to get that same payout from the dividend, hopefully. Now, Pepsi, similar situation, not as drastic. Okay, we have 1.15 shares of Pepsi at this point, and Pepsi is the only thing that we're actually up in the portfolio on right now. So we're at $201.89 is our position on Pepsi. Pepsi is $175.96 per share, and their dividend creeping up. This is not including the dividend hike that they announced that'll go into effect in June. This is their based off current, but that's creeping up because their same situation, they're now down 2.41% on the year to date. But 50 years of increasing that dividend year over year. Again, people would call this a dividend king. Now, I do have one bit of silliness that I did in the portfolio. This is the first bit of silliness that we have seen. because I'm not really that much about silliness, but NASDAQ had this like steep spike the other day. Hold on, let's just go to the day. It was like somewhere in around here, where it was like $56. And I thought that it would go up from $56, which it did go up. So what this bit of silliness is, wherever it just went, let's go back to shares. This is a call option. So a call option gives me the ability to purchase 100 shares of NASDAQ at $61.67 on March 17th. So that is extraordinarily random. Okay. Like, I understand that. I don't think NASDAQ will hit $61.67 on March 17th. However, I paid $10 to get the right to that trade. Okay. Now, if NASDAQ goes up, right? Let's say it goes up 2%, which would mean it would increase. Where are we at now? Where did NASDAQ finish out? So 57. So let's say it goes up 2%, and then it's roughly $58. All right. Now, $56 to $61 seems very difficult, right? But for a stock to jump from $58 to $61 doesn't seem that difficult. So what I plan on doing is holding this option for a couple days. Once the price of NASDAQ goes up, hopefully it does go up a little bit, I should be able to sell that option to someone else and make a small premium on it. So I bought that option for $10. I would love to sell that option to someone else for potentially $15 or $12 or whatever. It's just something that I wanted to try in this portfolio. Also, to get a hold of how Sofi's options trading platform works. I thought it was a fairly low risk of $10. I could sell it right now for $10. So yeah, I also wanted to make sure that I was doing this with something or a call option that expires in like 3 weeks, because I have that time to kind of watch it for a couple days and see how that moves and see how easy it is to buy and sell in SoFi. So a little bit of experiment, a little bit of silliness, and now it's in the middle of the portfolio and makes it harder to go over things. But so that's what that is. And then lastly, we have BlackRock. So BlackRock, we have 0.27 shares of. It's at $186.38. That's our value of what we hold. And BlackRock has come down to $683.43. It's crazy watching these huge stocks like this when they go up and down by like a percent. Like, it's just massive. It's so big. The numbers that they swing by are ginormous. But again, dollar cost averaging into it, this dividend's looking pretty good. 2.89%, guys. And that's BlackRock. They're a huge company. So I'm loving being able to buy, BlackRock at what I think is a discount right now. At least dividend-wise, it seems like a discount. Their stock has massive growth potential. Like, they're gigantic, and a lot of people still don't know who they are, which is even mind-blowing. But lastly, I want to take a look at this right here, the health score. So this health score, if you've seen the previous videos, kind of fluctuates around, but now our health score is 3.69, which is higher than what it's been before. And a lot of that comes down to, we have some very, very strong, highly profitable companies and very highly profitable funds in our portfolio. But now we have some growth and growth potential. The valuations are kind of off. But, the dividend scores are looking good. That's the most important thing, right? So they're saying that our safety score is really high. What this means, this is basically them analyzing the portfolio based on what professional traders say is risky or safe or not safe or, whatever. So it's good to see our dividend scores looking good. But the positions that we're currently buying these things at, the values that we're buying these stocks at, are great. They're really good. So dollar cost averaging into a bad market is definitely a win. We're lowering our cost basis, or we're lowering our average cost on the stocks every day that we have a week that's like this. When things are down a percent across the board, you want to be buying at that time, because as it comes down, right? Everyone says buy low, sell high. I'm going to buy it on the lowest day possible. It's going to be $50, but we're going to buy low. Now, when it goes up high, we're going to buy too. It is what it is, but we'll average out halfway between high and low. And then traditionally, the stock market does increase, right? So it might take 10 years, 15 years, whatever, but traditionally, again, the market goes up. So pretty exciting to see some good deals here. And that's basically what's going on. So just wrapping that up, sorry, I've been a mediocre YouTuber at best. Still going though. We're still kicking. I got a lot of big stuff. Again, in my personal life settled this week, which is important. I needed to do that. And sometimes it's going to happen. It is what it is. But we'll get back to, focusing on a couple videos. I am planning this. I'm going to do this tomorrow night. So tomorrow night, I'm going to put up a video about what's going on with MPW and why is it all over the place. So we'll do a video about that. And then again, I got to get back in the gym. I need to be back in the gym. I was there Tuesday, got in like a solid 2-hour workout. I've been doing some snowboarding and stuff, and I feel like that's exercise, but it's not. I mean, it's just not. It's not the same. It's not the same as like dripping sweat onto the floor, and it's disgusting, and you come out of there and you like literally look like a different person. I look like a different person after I'm done working out. Like, I don't know if you guys do that, or maybe I just feel so much better about myself that I feel like I look like a different person. Either way, way better feeling than snowboarding. Snowboarding's fun. Don't get me wrong. It's super fun, but it's like saying that basketball replaces going to the gym. It just doesn't. Golf does not replace the gym. It does not. Is it kind of halfway there? Sure. Could I retire that way in a healthy lifestyle? Probably. But I'm fat, bro. I'm fat. I gotta lose weight. I'm not at a healthy point where I can just coast by golfing every day. Oh man, I would love that though. It'd be so good. Anywho, so yeah, we're excited about the market coming down, because when this thing rebounds, oh boy, we're gonna be getting some serious gains, and that's a conversation for another day. But I look forward to next week. It's a fresh start. I'm hoping week 9 of investing will lead to a stronger YouTube presence and just a better job. I now know what it feels like to do a bad job on the YouTube thing, and I feel like I did a bad job. So, just good stuff all around. To be honest, I feel really good right now. So, thank you for listening to me vent. Good growth in the portfolio, and assuming that the market doesn't tank that bad, $2,500 should be next week. So tune in for that. And with that, happiness, health, and wealth. Roll the outro.